Hey everybody, I'm back in the car. Sorry for these car videos. I know they're not as popular and as professionally done, but I'm on the road again. I'm actually back in Florida, enjoying this hot, muggy summer weather, and I'm just scouting areas for our sewer business and some new real estate investments that we're pursuing. So I'm going to be on the road a lot for the next few months. Just bear with me. I don't want that to affect the really great content that you can get from this channel to learn how to go further, faster financially. So make sure you hit that subscribe button. The real question I have for you guys today is whether or not you should be worried about your bank. Now, following the recent collapse of yet another major American bank, concerns about the safety of one's funds are being stretched to the limit. On May 1st, First Republic Bank, a substantial regional bank headquartered in San Francisco and with assets that actually surpassed $200 billion, was seized by regulators, and shortly after, JPMorgan swiftly acquired the entirety of First Republic Bank's deposits and a significant portion of its assets. And this was the second largest bank failure in U.S. history, and it's leaving many Americans, myself included, wondering what will happen next. In today's video, what I want to do is take a look at the unfolding bank crisis, including some of the banks that have the most uninsured deposits, so that you can determine whether or not you should be worried about where to keep your money. Make sure you're sticking around. This is a very important one. Before we get too deep into today's topic, I want to remind everybody to avoid premature panic about this subject, as doing so in situations like this is only going to make matters worse. It is true that the U.S. banking system is becoming more and more worrisome following the most recent bank failure. First Republic's downfall came just months off the heels of SVB and Signature Bank doing the same, and all three share a common unraveling thread: a high proportion of uninsured deposits. So it's no surprise that SVB was the bank with the highest share of uninsured deposits at 93.8%. or just over $150 billion. Signature Bank came in fourth with 89.3%, or just under $80 billion of its total deposits being uninsured. Sitting at 10th on the list was the newly fallen First Republic Bank with 67.4%, or just under $120 billion of its total deposits being uninsured. All right, so a couple of banks to keep an eye on here are Bank of New York Mellon and State Street Bank and Trust, which are numbers 2 and 3 respectively. Rounding out the top 10 list includes Northern Trust, Citibank, CIBC, HSBC, and City National. Just because the three notable bank failures of SVB, Signature, and First Republic all had a high share of uninsured deposits domestically, it does not mean that that is the one key indicator for future failure. As David Hayes, who is the author of the S&P report, which gathered the top 30 U.S. banks by proportion of uninsured deposits, puts it, not all insured deposits are equal. It does give you a bit of a clue, but there are often other factors at play here with uninsured deposits, as they may actually be covered by other banks and there may be collateral for certain assets. Now, both cases result in reduced risk, but I think it's important to keep this in mind and not get too carried away by looking into just a single metric like the proportion of uninsured deposits. It's just one clue. And while any vulnerability in the U.S. banking system is certainly a cause for concern, bank runs exceedingly are very, very rare, and customers seldom suffer financial losses when it happens. Typically, it's the investors or the bondholders who bear the brunt of such situations. The recent collapse of SVB serves as a prime example of how panic can lead to poor decision making. As interest rates rose, the bank's investments plummeted in value, and that resulted in a loss of $1.8 billion when its $21 billion bond portfolio was sold to cover customer withdrawals. This loss triggered a panic-driven bank run, rendering SVB unable to fulfill those financial obligations. And consequently, the bank was closed on March 10th and placed into receivership by the FDIC. It was the panic that caused the crisis for SVB. And without the run on the bank, it'd likely still be solvent at this point. And it was panic that continued the trend with Signature Bank, ultimately suffering the exact same fate. Now, that being said, it's really important that we all try to remain as calm as we can in the wake of these bank failures. Not easy to do since it's so much out of our control, and we really don't know what's going on behind the scenes, right? If you're worried about whether you are potentially exposed personally, I'd recommend that you make sure that you're not overly reliant on a single bank. It's always a good idea to spread your cash among a handful of banks. I use 6 or 7 banks myself personally, and do that especially if you've got deposits over $250,000 with a single bank. Remember, the FDIC insures deposits up to $250,000 per depositor per insured bank for individuals and up to $500,000 for a joint account with your spouse. While it is a good idea to diversify where your deposits are sitting, it's also not the best idea to shake things up too much, as the downside to folks taking out their money all at once has become incredibly apparent. So if you've got under $250,000 in a single bank, don't concern yourself too much with taking out, say, half your cash and putting it into another bank. You're already covered. That said, I would recommend anybody who still feels uneasy about their bank to reach out and ask your bank about the measures that they are undertaking to safeguard your funds and the protections that they may have in place to prevent any loss of your hard-earned cash. So I'm curious, what do you think about everything that's happening surrounding SVB, Signature, First Republic? Have these bank failures given you anxiety about the safety and security of your money? Let us know in the comments below. Thank you so much for watching today's video. Don't forget to like and subscribe, and please share the video with anybody that you think would benefit from it. Until I see you on the next one, make it a great day today and keep on cash flow. Take care.